I'm David Trainer, CEO of New Constructs, here to talk about our first quarter 2014 best and worst ETFs and mutual funds for the materials sector. This is one of several reports on all 10 sectors for the best and worst ETFs and mutual funds. The materials sector ranks 7th out of the 10 sectors we cover. And as you know, all of our ETF and mutual fund ratings are based on holdings, because holdings make a difference. And in the materials sector, the ETFs and mutual funds can have anywhere from 13 to 150 holdings. All of that means that the investment implications for these ETFs and mutual funds can be very different based on their holdings. Every one of my reports will highlight my best and worst ETFs and mutual funds for the sector. For example, my top-rated ETF in the materials sector is iShares North American Natural Resources, ticker IGE. My worst-rated ETF is the State Street Spider S&P Metals and Mining ETF, ticker XME. My top-rated mutual fund in the sector is the Fidelity Select Materials Portfolio, ticker FSDPX. And my worst-rated mutual fund for the sector is Icon Materials Fund, ticker ICBAX. Figure 3 in every one of these sector reports will highlight how the stocks in the sector stack up compared to the mutual funds in the sector. In other words, Figure 3 shows that over 50% of the market cap of the materials sector is in stocks that get a neutral or better rating, while none of the funds or ETFs in the sector are able to rank as well. That basically means that the mutual fund managers and the ETF providers in the materials sector are doing a bad job of picking the best stocks. And one of my best stocks or favorite stocks in the materials sector is CF Industries, ticker CF. That company's managed to grow its profits tremendously. 37% compounded annually over the last 5 years, and yet the valuation of that stock implies its profits will permanently decline by 35%. Very strong cash flow, super low expectations, good risk reward, good stock. One of the stocks I like least in the sector is the Dow Chemical Company, ticker DOW. This company's seen profits decline by 6% compounded annually over the last decade, and yet the valuation there implies that the company's profits will grow 16% compounded annually for the next 12 years. Again, that's the valuation implied in a $46 share price for Dow Company. Good mutual funds and good ETFs have to hold good stocks. Costs alone are not going to drive performance. Thank you.